Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting firm owner who wants to learn how to provide virtual CFO services, then this podcast is for you.
Hello, everybody. Welcome to today's podcast. I can't believe we are 6 episodes in and we have not talked about the sales process yet. Obviously, this is a very important topic. You can't do great work if you don't have great clients. So today, to talk about this topic, we have one of the owners of Summit CPA, Adam Hale. And so, Adam, what to you is key to the sales process? Let's dive right in and talk about it.
Yeah, well, before we do, let's just break it down a little bit because you got the marketing side and then you got the BD side on the business development. So the BD side's super easy because once you really, as it relates to selling VCFO services, once you get a good rhythm on who your client is and what you're doing, that part of it's super simple. And I'm not going to dive a whole lot into the marketing side because quite frankly, I'm not the expert. We can get Kelly, our marketing director, in here on a future podcast, and she can kind of talk to you through the difference of, whether you want to do pay-per-click advertising or build up content. But I can tell you just from a general standpoint, what we typically try to do is we sell through education. So rather than doing a whole lot of sponsorships or being in booths, doing a lot of mailers and stuff like that, we try not to be sponsors and do a whole lot of that kind of advertising. What we're doing, if it's in your community, you're just going to do some grassroots stuff, working with commercial lenders, that kind of thing. But again, what you're trying to do is position yourself as the subject matter expert, not as a sponsor, not trying to do sales. So what we do a lot of times is we just educate our client base. We tell them exactly what we do, how we do it, give away as much information as we can because the reality is that information's out there. It's in the internet. People can buy tools to get all these amazing KPIs. It's just whenever it comes down to using the information. So taking that data and turning it into information is a difficult process. And so that's what kind of our role is. And that's why we're not fearful of giving our clients all the information. So on the front end, trying to get them in the door, like I said, is more about education and being that subject matter expert than it is sponsorship or sales per se.
So let's dive into that a little bit more. So you talk about being the subject matter expert. In order to do that, do you have to have a niche? Do you have to have a vertical you stick in, or is there a way to do it other than having that vertical?
Yeah, that's a great question. And a lot of the firms that will coach, that's the first thing that we try to do is say, hey, do you have a vertical? And by that, I mean an industry that you work with more than one or two of, and something that you're passionate about, because I think that's important too. So if you really hate manufacturing, but you got 5 manufacturing clients, it might not be the best vertical for you to go into, right? Like it's got to be something that you enjoy doing. And then once you've been able to talk to 2 or 3 clients and really get to know their business, you really understand their vernacular. So you're using the same terminology, you're talking through similar issues, and it's really easy to become that subject matter expert once you've had a couple of those clients and you kind of dug in. So yeah, I can tell you that, in terms of being able to charge fees, like higher fees, having a niche definitely goes a long way. I mean, that's just a fact. You're more valuable if you have specific institutional knowledge about an industry and you can leverage your experiences. And that translates into higher fees whenever it comes to the client side. That said, and what niche also allows you to do, and something we talked about before was being distributed, having clients that are nationally, having them all over east to west coast, north to south, doesn't really matter if you have a niche. You can just kind of go after everybody. If you decide you just want to focus on small businesses, you kind of have to frame that out a little bit. You can be industry agnostic and still kind of pull this service off well. It's just now you're going to be wanting to focus your marketing and all those efforts on a more geographic or regional level. Those will kind of be the key differences. Again, you can go both paths. You just need to kind of figure out which one's going to work best for you.
Yeah, I think the key part that you recommended there is the terminology. Like I can't imagine, and I know we've made this mistake before, when you walk into a event with all these people that are in the industry every day and you're using all the wrong terms. You're using all the terms that just don't make sense to them. It definitely takes away from your credibility. So you kind of have to understand the industry. You have to be talking to people in that industry quite frequently to be able to really talk about those right points and say the right words in order to establish yourself as that expert. So that's super important.
Absolutely. Knowing their pain points is huge. and if you can drop in those terms, then people are like, hey, you get me. How many times have you, if you do a lot of restaurants, you go and you're talking to somebody, you're talking to the owner of the restaurant, don't realize that's who you're talking to. And they're like, oh, you own a restaurant. And it's like, no, just help a couple of people run them. So you understand that, and people really take a liking to that. And I would say most of the time, whenever we do have clients, one of the first questions they ask us, and I'm sure they ask every other CPA firm out there in the world, is, so do you have any more people that are like me? Because at the end of the day, that's what customers want. They just want to know what everybody else is doing, just to make sure that they're not an outlier or they're doing things the right way, those kind of things. So that's a good starting point, is definitely, our preferred method at Summit is to be more niche focused. But, like I said, there's ways to also do it if you're industry agnostic as well.
And I think another added benefit there too is when you're serving the client. And I think a lot of companies have come to us for this reason alone, where we can say, yeah, we work with 30 other clients that do something similar. We're able to add tidbits during the account, when we're working with them, to say, hey, I've seen another client do XYZ. Have you thought about doing that? And you're able to bring that stuff to the table, which they really do appreciate. And again, you don't want to say, I have client XYZ that does this. You can't really call them out like that. But if you see things over and over again that you're working with one client they're not doing, you can definitely add that advice as well. So that's another good thing about having that vertical.
Yeah. Pro tip. Do not mention your other client's name to your other client.
For sure.
That definitely would not be good. But to your point, though, I mean, it goes a long way, and they respect, your opinion, your advice a lot more, because you say, well, I've seen it work this way. I've seen it fail this way. This is kind of the in between, that kind of a thing. So, I mean, and that's really, what we're doing with our accounting firms. And, we've been delivering this type of service for a long time. So that's all we're trying to do, is we're like, hey, this works, this doesn't work, that kind of a thing. So beyond the marketing effort and getting people in the front door and that kind of stuff, it really starts with just identifying who your ideal customer is. And I can tell you, for us, just in the back office, some people call it BOSS for back office support, or CAS for, client accounting services. We call it VCFO services. There is a distinction there. I want to be clear. There's doing the accounting work and bookkeeping, and then there's doing the advisory work. So there are those two definite divides, and they require sometimes a different customer, and sometimes also, different people on the team as well. But in general, just to kind of walk that back, an ideal client delivering this type of service is going to be roughly starting right around $1.5 million, all the way up to $50 million. And I know that seems like a super wide band, and it definitely depends on whether it's construction or manufacturing or service based. Obviously, a manufacturing client's going to have to be much larger than that's not comparable to $1.5 million service base. It's probably more like a $10 million manufacturing company. But in general, under $50 million, not a whole lot of small businesses have a dedicated CFO. What I'd also say, though, is that optimally, you would be between 4 and 20 million. Because at that 1.5 mark, they're still just a little too small, and we definitely do not want to be their biggest expense on their income statement. So right around $4 million is whenever a lot of small businesses start to feel the pain of either trying to have their accountant be a controller, or their controller trying to be their CFO, and they're just not translating to advisory services. And then once you get over $20 million, you will start to find, even if they're not the perfect fit, you'll start to find that there are CFO type roles from that 20 to 50 million. And a lot of times what we'll do is we'll play that FP&A role, where we're doing the financial planning and analysis. We're supporting the CFO in becoming that, I don't want to say controller, because it's more than analysis, but as companies start to grow, the CFO becomes more than just like a numbers person. They're usually kind of out of the numbers, and so we're really kind of backfilling into that role from that 20 to $50 million role. So I know big range, but the cool thing is that means there's a ton of clients out there for every CPA firm.
Yeah, no, I think the important thing there too is that when you are working with those clients, I definitely agree with Adam, is like that $4 to $20 million range. You really feel like you're adding value, and so I think at any level, even if it's at the 1.5 up to the 50 million, you want to make sure you're adding value to the clients, because the second that stops happening, they'll see it and they'll notice it, and they'll be like, oh wow, we're paying you all this money, and you're basically just sending finance statements our way every month. That's it. We could hire a bookkeeper to do that. So I think that $4 to $20 million range is where there is a lot of areas for us to add value. They don't have someone in-house doing the CFO. They don't have someone who's helping them advise them forward. So I do think that's a great range there.
Well, and a lot of these clients at that revenue size are paying a third party accounting firm, anywhere from $20,000 to $30,000 a year, and they're getting exactly what you just said. Not a whole lot of value. They're getting financials, they're getting a year-end tax return, and that's the reason why whenever you look at NPS scores for accounting firms, it's so low. And we're almost like at the world-class rating, and that's because we're delivering a service that's got a lot more value added to it. So, you can double or triple your fees. Now you're going to be doing more work, but it's going to be more sticky, value added work rather than, the month end close and things that the client would shop you for in a heartbeat, especially if a firm like ours came along and said, no, we can do A, B, and C for you as well. And it's only going to cost you twice as much. So that's, from a revenue standpoint. So if you're just like assessing your initial book of business, like that's a good starting point. I would say, as we kind of dig a little deeper, you also want to find a client that has a need. We've all been there where, a client's doing really well. They don't really need our help. They don't think they need any help anyway until things go down. That's what's kind of also cool about our service. I don't want to say it's recession proof, but you'll have a tendency for these clients to want to come and listen to you a lot more whenever things are a little bit more turbulent. So a lot of times where we started off is we just looked for clients that had a need. They're scaling. Maybe they're growing really well and they just need somebody to kind of manage that growth for them. Maybe they have cash flow problems, so they need cash flow management. Or they're just trying to figure out where they want to be in the next 3 to 5 years, that kind of a thing. Because our primary focus is on the forecasting and helping to clarify direction. So I think step one, look kind of at the revenue bandwidth. Step two, see if they have a need. See if you can identify what that need is, because that'll be pivotal during the quoting process. And probably the third thing that I think is super important, Jamie, is like just making sure that the client is available and open-minded.
Mm-hmm.
Totally different service, right? Like if you just want me to crank out your taxes and put together your financials, I'm not asking for your opinion. You're not asking for mine. I'm not giving a whole lot of feedback. Take it or leave it. Let's go. But this one, we're really augmenting their team, and it's important that they listen to us. That doesn't mean they always agree with us, nor do we agree with them, but we're always having that conversation. So the client has to be available. If they can never make a meeting, we'll flat out just tell a client, like, in this service, you need to meet with us twice a month. In this service, you need to meet with us 6 times a month. And if you can't do that, then I can't provide value and I wouldn't hire us. So being available is important. And then just making sure that you have a good partner on the other side that's going to like value your opinion. That one's sometimes a little harder to uncover, because they come to you with such a strong need. You got to really be careful balancing the two of those because, like I said, somebody will come to you like they're scaling and they're like, oh yeah, I'm going to listen to you. And oh yeah, I'll be there. Cash flow management, same problem, but they just keep digging the same hole. So I wouldn't bypass that one. And what I'm saying by that is just that one, you might want to spend a little bit more time in the BD process, just kind of, drawing a line in the sand with the client there and just saying, hey, I just want to be upfront. Like, this is how I operate. This is how I add value. Clients really respect them like that, I think.
Yeah, I think that the two things there. The first thing I think is a lot of times you can tell that during the onboarding process, but you can't tell it during the sales process. If in one of those weeks, and again, our onboarding takes anywhere from 6 to 8 weeks, if in one of those weeks you're able to just have a free-flowing conversation with the client without a lot of notes, then that's probably a good client for this service. Because a lot of times you just want to talk. You just want to say, okay, what are you thinking about this week? And what are your big concerns? And that conversation just doesn't last 5 minutes. You want that conversation to last an hour, and you're able to freely talk with these people and just have those conversations, because that's where the value comes in. You don't want people that come in closed-minded either way. They know what they're doing. They just need you to do the books for them. That's probably not a great VCFO type client. So that's the first thing that you mentioned that I wanted to expand upon a little bit. And the second thing, which I think you talked about briefly, but I want you to expand on a little bit more, is early on, you're going to be tempted to take clients that only meet half this criteria or 3/4 this criteria. And those are the clients that are going to be your biggest pain in the butt. And so can you expand on that a little bit on why this criteria is important and why it's important not to just do the money grab of, okay, this client isn't a great fit, but we're going to take them on anyways because we need some clients. So can you expand on that a little bit?
Yeah, I mean, it comes back to, at the end of the day, even though we do a lot of marketing and you can do a lot of grassroots stuff, we do still get a lot of our clients from referrals. So it's really important that your reputation kind of precedes itself. And if you're just going after these people that don't fit your culture, your fit, these parameters or the parameters that you've set for yourself when, figuring out who your ideal customer is, it's really hard to set process. you know, First off, the delivery is really going to be based on, making sure you have an efficient process in order to kind of deliver this type of service. You get people out of this bounds, like people that don't make meetings or people that are outside of your niche or your vertical. It's going to be very difficult to really nail that down and expand and grow and scale your business. So that part's difficult. But then on the back end, we've always found that something is hiding in the mist and it surfaces, and whenever it surfaces, it becomes apparent that it's not a good fit. And really for us, it's about a long-term relationship. This isn't like let's crank out a tax return and deal with somebody for a month or two. It's about delivering this service and being a part of this customer's business cycle for years to come. And so, just like any other long-term relationship, if it's not a good fit, then you're just better off just not wasting either person's time. Send them to your competitor. It's okay. Like I said, there's plenty of these folks out there.
Yeah, and I think this is the hardest part of the sales process is it has to be a two-way street. And I think that's something that, again, it's really hard to do. And it's something that I appreciate that Adam and Jody do. I think if I was running my own company, it'd be a lot easier just to be like, hey, this guy's willing to pay me $100,000 a year to do this. Like, I don't care how bad of a fit it is. I'm going to take it for the 3 months it'll work. So I think it's something that's really hard to do. But I think it is really important because you want clients to be the right fit for you and who you are and the services you're providing. And we try really hard in our sales process to do that.
Well, that's learning lot, man. So that's what we were talking about earlier, just kind of sharing best practices. This is one that we learned the hard way. And like you said, it's not perfect, but it's one that if you're really diligent about in the sales process and try to be super upfront with, it goes a long way. It's just like when hiring a team member, you can kind of get the same feel. The same reason why you would vet them fully and not have somebody that's not going to be a good fit. It's the same reason why you wouldn't want the customer. So and trust me, whenever we were smaller, we would take just about anybody. We were like, yeah, they're going to pay us. And some of that was, some of it might've been greed, I guess, but a lot of it's just ego, it's pride. You think, hey, I can help this person. I can fix this person. Sometimes not. So you're better off just kind of like, again, just setting those boundaries early, telling them what you can do and can't do, and just getting on the same page super fast.
Yep. So real quick, I want to throw our email address out there. We're always looking to improve this podcast. So if you have any topics for us, if you want to be a guest, always feel free to email us at cpa@summitcpa.net. Again, we'll take any kind of feedback or topics or anything we can do to help. So again, that email address is cpa@summit, SUMMIT, So appreciate any feedback we can get from the listeners out there. So Adam, I want to turn the tables here a little bit and talk about our sales process directly. So we went to a presentation, someone we met there, perfect fit for us. What does our sales process look like from there?
Yeah, typically somebody will reach out to us via email or our website. They'll go ahead so we already have our Calendly up on the website. So somebody comes in, they submit, they'll schedule a time to connect with either Jody or myself. And then whenever we get on the call, first thing we do is we just have a conversation. It's just a fit conversation. We're just kicking back, relaxing, talking about life, just kind of getting a feel for, if we'd be a good fit for one another. And then we're asking them, why they came to us, what they were looking to solve for, tell us a little bit about the history of their business. So we'll spend probably of an hour conversation. We'll spend 20, 30 minutes just getting to know them and their business and everything else. Because what that's doing is that's allowing us the opportunity to go ahead and give them a good start on what the quote will look like. So I think what's unique about our services is, you hear a lot about value-based billing and everything related to that. We value based on the actual item or the service. So it's not the overall package, meaning specifically we value base financial statements. We value base forecasting. We value base our CFO meetings. We value base doing payroll, doing AP, all those things individually, we have a price. Now we have some things that fluctuate that, based on number of employees or the size of the company that'll kind of, make those all go up or down. But we made sure that whenever we do that, that way the client can have our core services of two or three things, and then they can just add on everything a la carte. The power behind that is there's no like, have you ever felt like whenever you go somewhere, you're just like, they're just pricing me out by my ability to pay? Like,
Yeah, totally.
the car dealer's always like, well, how much do you want to pay? Well, I don't know. How much is it? Like, we take all that out of the equation. So it's not like that at all. What we do is we put our quote right up in front of the customer. Now, based on our conversation, I'm going to lead you a certain way, right? Because I already can tell you need this, and you don't need this. So I'll go ahead in the first option and we'll show you three or four options on the call. And I'll walk through and I'll say, hey, based on the conversation, I think you said you needed this, you don't need this. And they're like, well, no, maybe I do need that. Go ahead and turn it on, those kind of things. So we'll walk through this really cool layout of how we have all of our pricing in there. And at the end, they'll be able to see what their own weekly fee is. And then so, it's just like asking what their budget was at the beginning. How much money do you want to spend? I don't know. How much does it cost? That same kind of feeling.
Yeah.
Well, this is where you get to gut check it. So whenever they built it, everything they wanted, and it's $110,000, they're like, well, it's kind of out of my range. What if I could do this myself and do this myself? And it's like, okay, cool. I'll show you how that is. Oh, you want to add taxes? You don't want to do taxes, that kind of thing. And we'll build out three or four scenarios for them right in front of them. And so now they've been able to build themselves a small, medium, and a large kind of a plan and prioritize what's the most important thing to them to get out of our service. So, that's pretty powerful to let the client pick their own price and be able to do it in full transparency right in front of them. And they leave that first call feeling good about our abilities, our understanding of who they are, and then also what services we're going to deliver and exactly how much it's going to cost them. Because we do everything on a fixed fee. It's just weekly. We ACH it right out of their account on a Monday, that kind of a thing. So we do have an onboarding fee and an onboarding process, that we can talk about another time. But the whole thing's built out right there in front of them. And so post call, what we do is we just send them a quick screenshot of that. We're like, hey, here's the screenshot. You were leaning a little more towards option A. Here's a couple quick differences. We have a white paper on our services that they can kind of look at and kind of, think more about. And then we put our phone number and our calendar link if they want to connect with somebody else on the team or interview one of the CFOs, or, they have a couple different options. But we do that immediately following the call within that same day. We make sure that they get that email out, and we get a really good response rate to that. Very, very infrequently will we ever get ghosted on that last, if we're sending out the quote.
Yeah, I think what's unique about the process, from at least my opinion and from what I've seen, is that they get the price so quickly. I think a lot of times when people come and talk to us, and I've been involved in a number of sales calls, like their expectation is it's going to take 2 to 3 meetings before they even know how much we cost in general. And so the fact that we pull that spreadsheet up and we're toggling through the buttons, like Adam says, and again, going back to the right fit, that's important to us. The last thing we want to do is put a client in package A when they really need package C. In the long run, that client's not going to be a happy client. So getting them in the right package is important to us, and we can tell that on the call. But the fact that they have numbers in front of them within like 30 minutes of the call, I think is a big difference between what we do and what a lot of people do, because you can always see the surprise on people's face, like, oh, okay, well, we already got an idea of how much you cost, and there's really just not a lot of like back and forth in that part of the process, which I think is pretty unique.
Yeah, the money part of it sucks. That's the hardest part of any sales process, right? Like I can sell anything to anybody, just don't let me, don't make me charge money for it.
Yeah.
So that's always the most intimidating part of everything. So being very transparent and upfront and giving them the flexibility to, like I said, just shuffle the deck and prioritize what they think is the most important features is huge. I've had so many clients get on there and say, well, you know what, I guess I can do this, this, and this. But then what we also let them know is that we don't work on an annual contract. We work month to month, and we let our value kind of speak for itself. And so we're in it for the long haul. And that means that they can also shift up and down into these packages as we grow the relationship. I can tell you, for instance, we only start off with probably 50% of our tax returns. Like we prep 50%, because they might have a solid relationship with the tax preparer already, or they're feeling okay with that part of it and they just don't want to put everything all into one place. By the time we got out of onboarding in 6 to 8 weeks, they're like, how much was it again to add taxes? Or like,
Yeah.
why don't I, or they're like, why didn't I do taxes with you again? Because they get to meet our tax team and how involved we are. They're super impressed in the delivery. And, we do taxes for like 85% of our clients. So we pick up almost all the rest of those. The very few that we don't, some of those come at year end, the next year, or some of them just don't ever end up switching because they're an ESOP, or they have their uncle's brother does it and has for 30 years. You're never going to penetrate those relationships. But like I said, it's pretty impressive whenever you see that. And so many times too, we'll have a client start off with a lower service. And then inside of our Slack channel, we have a fee adjustment page. I'm constantly seeing that thing move like, hey, such and such is bumping up. We're going to charge them 300 extra bucks a week, that kind of a thing as their needs change. Clients like that flexibility, knowing that they can grow with us too, I think.
Yeah, definitely. So one final question for you, Adam, and this is something I've never talked to you about, so I'm kind of interested in your answer on this one. Is so Summit does something unique in that our CFOs, who are kind of like our partners or our senior managers, have no sales goal. They have no sales expectation. They don't have any sales requirement. But at the same time, our sales process is so easy that anyone can do it. So we have kind of that easy blend where, like, when I was a CFO, I didn't have to do any sales, but occasionally I would jump on a sales call and I could handle it just fine. So there's kind of two elements to that. Can you kind of dig into that, why we set up that way, and exactly what the thought process behind that is?
Yeah, again, it's just the difference between BD and marketing. So we have such a marketing funnel. We've just put in, and we've worked really hard at it for the last 10 or 15 years, just blasting tons of content out there. So that, and then going to these speaking engagements and being that subject matter expert, that we really don't need feet on the street going out there and trying to knock on doors and bring people in. You know what I mean? Like we don't need you to be a hunter if you're a CFO necessarily. Now that doesn't mean that you can't join your local Rotary Club or get into some kind of thing, and I mean, like, definitely leverage your local contacts, especially if you have CFOs in all the different cities and stuff like that. That no problem. We incentivize our team. We give them 10% of the first year's revenue if they bring somebody in. So, but it's not a requirement. You don't have to do that with us because we have the funnel already in place. But we do want to make the tool easy enough, Jamie, so that, if Jody and I aren't available, you should be well versed in everything that we do. You should understand how much we charge for it, when things are in scope or out of scope, how to adjust things, because all those fee adjustments that we're talking about, those are all handled by the CFOs. So the CFO knows, like, hey, the client's going to need me to really step up and do A, B, and C, or their bookkeeper left and they need us to handle bill pay and cash flow management. So we don't want you coming back to us and us starting the whole sales process over again. It's just, we wanted you to be able to go into the tool, select the 2 or 3 things that they had originally turned off, add them on, see what the price difference is, super fast, go right back to the client, say, yep, we can do that. Here's how much it is. And then we re-engage and go with the new dollar amount. So it was just about making it super simple. Again, we don't need you to necessarily hunt. We just need you to understand what you're delivering, how much that is, and where the opportunity is to grow the services with the client. That was super important to us.
Yeah, I think it's great. I think in the interviewing process and the hiring process of CFOs, this comes up a lot. I think a lot of people just come in with the expectation that they're going to have a sales goal, like they have to sell X number of clients, and that once we tell them that, some of them are a little disappointed because they actually like that part of the process, but some of them are like, it's a big smile on their face and like, all right, this is where I want to work, just because they don't have that expectation and the pressure that comes with it. So it's always been a really nice part of the hiring process for me when I interview people to have that conversation, because you can always see where their mind goes once you bring that up to them. It just, a lot of times, it just takes the pressure off.
Yeah. And I would say that's probably unique to having that niche and being more national than local, that kind of a thing. I think that in some instances, the BD part of it might be a little bit more on the CFOs if you're just kind of industry agnostic and working in a local region. You might have to get on the board of a couple nonprofits and work some leads groups or things of that nature. Those things are all good. And like I said, we don't tell our team they can't do those things, but we have a very, very specific client profile. And so for you to go and get that exact person is going to be a little bit more difficult than maybe a traditional firm.
Yep, definitely. All right, Adam. So we're right up against the clock here. Any questions I didn't ask or topics that you want to touch on before we close the podcast?
No, man, I think we went through it all pretty well. Like I said, we can kind of go through a little bit more on the quoting and onboarding process on another call, and we can definitely get Kelly in here on the marketing side. I think a lot of people would like to hear more from her on what she's doing and how she's kind of helping us get the word out.
Again, yeah, I really appreciate your time today, and thanks for joining us.
All right, thanks.
Enjoy this episode? Visit our website at summitcpa.net to get more tips and strategies for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.